Welcome everyone. Welcome to this episode of Market Wrap. I have with me Mr. Pankaj Pandey, and this week slightly up, slightly down, mostly where we were as was the week last before. Sir, what is the outlook from here on the markets?
Yeah, hi, good evening, Vishu. Yes, like you said, this is sort of was a lackluster week. We've seen more of stock-specific action, largely because of the ongoing result season. But after a long period of time, you're seeing Nifty outperforming the broader market. So Nifty gained about 1.5%. There were some sectors, especially the beaten down sectors like say infra and reality, they did well. And now sense is that there's geopolitical uncertainty, especially related to India and Pakistan, is going to persist, and which is why directionally we don't expect market is going to sort of take a particular direction. So from that perspective, again, it is going to broadly consolidate in this range of say 23,500 to 24,500 kind of a level. So 1,000 point kind of a range unless it closes above 24,500, then only we can talk of 25,000 kind of a levels. Otherwise, markets are going to be there in this range. And historically, May has been sort of okay for the markets last 10, 12 years. 9 out of 12 times, Nifty has driven positive returns of about 2 odd percent. Good part also is that the market breadth has improved. So for example, the percentage of stocks above 50-day simple moving average or 200-day moving average, I think those have jumped to 70 and 30 odd percent. This was about 7% a month before. Again, so a lot of these news flows are definitely going to drive the market. We have seen FI flows, bilateral trade agreement, any news related to that. Then even the rupee has started to sort of appreciate because the confidence in dollar is sort of winning. And another good part is that the crude oil prices have declined somewhere down the line. It looks like that OPEC is no longer in a mood to sort of sustain the production cut. So in fact, big players like Saudi are looking to increase the market share, and which is why crude oil prices are on a decline, which is definitely good for us from a macro perspective. And like we highlighted last time, gold prices have corrected because as and when this tariff-related anxiety sort of peaks out, gold is expected to sort of decline. And so overall, you will see more of a stock-specific action, and again, probably another week where nothing much is going to happen.
Right. And meanwhile, how have FIIs been behaving? What is the commentary on FIIs?
So yes, I think what has happened to started to happen is that the U.S. market is not performing, and somewhere down the line, it looks like India is benefiting to some extent from that. And in fact, if you look at since October last year, FIIs have sold about 2.5 lakh crores. This includes the primary inflows. So December was the only month when the inflows were positive. Otherwise, most of the months or all the months, the FII inflows were negative. April again, we are seeing a change of stance, especially from FIs, because first half they sold somewhere about 30,000 odd crores. Second half, actually, they have bought about 30. So first half they sold 30,000, and second half they bought about 35,000. So resulting in a positive flow in the month of April. And that has obviously worked wonders for the large caps. So oil and gas was the biggest sector which has seen the maximum amount of outflow, especially Reliance. And we've seen Reliance sort of doing very well post that. The FSI has already started to sort of do well. So from that perspective, two of the biggest sectors have started to do well. And we are not seeing further sell-off in IT. So again, if you sort of add component-wise, nearly 60% of the Nifty is no longer sold by FIs. So from that perspective, the entire outlook changes, and which is why I'm not surprised to see that the Nifty is outperforming the broader markets, and probably this trend is going to sustain for some period of time. I think that towards the month end, you'll have some MSCI rejects, so that again might benefit Indian companies. Net net, FI is turning positive after a good period of time is definitely a big positive for us.
Right. Sir, I think auto volumes for April 2025 are also in. So what does the picture say?
So when you sort of dissect the auto volumes, Vishu, nothing much changes. Players who have been sort of doing well, they continue to do well. The players who have been sort of struggling, they continue to struggle. But overall, I think it's a steady start to the overall year. Exports have done well for most of the players, but within companies, M&M continues to sort of do very well, largely because of the good SUV portfolio is what they've got. Similarly, TVS continues to sort of do well in the two-wheeler domain and even on the EV side also. And I think Eicher Motors is doing well on the CV side. So TVS again has seen a healthy volume growth of about 15 odd percent, M&M about 27 odd percent. CV again, Tata Motors is lacking or reporting muted volumes. Tractor space again is shaping up well, so about 8% kind of a growth on a better base. And our sense is that we'll see the benefits of good monsoon, which is expected this year. Then you have the tax rationalization, which is expected to sort of help. And again, you will have age pay commission, which will sort of kick in probably from FY27 onwards. So it is good for a discretionary category like auto to sort of do well. Again, top pick is M&M with a target price of 3,700.
Great. Sir, let's talk about results that were announced this week, starting with cement, maybe. Ultratech and Ambuja, two big majors announced their results. How did it look like?
Oh, yes, I think this is one sector which has been struggling for quite some time. So again, when you sort of look at numbers on a YY basis, you'll see a decline. But I think when you look at it from a quarter-on-quarter perspective, both the companies did well. So, for example, Ultratech, the volume growth quarter-on-quarter was 35%. Again, because of the consolidation of India Cement volume numbers, realizations have started to sort of improve. So it's up about 2 odd percent. And I think good part is that the EBITDA per ton has improved substantially, so about 18% quarter on quarter. So again, about 1,000 rupees. And going forward, again, we would expect this company to deliver a volume growth of 10 odd percent, while the industry the demand is expected to be 7, 8 odd percent. And again, volume besides volume growth, we would expect EBITDA to also sort of improve going forward. So again, it's a story. Overall, things are going to expect it to sort of improve from current levels, and which is why Ultratech remains a buy for us. Ambuja also was no different from that perspective. Quarter on quarter, again, we are seeing a 13% kind of a volume growth. Again, there since this company also has been acquiring, so this volume also includes Sanghi Cement and Penna Cement. Prices have also sort of improved quarter on quarter, and as a result of that, EBITDA per ton witnessed a sharp improvement. Say from 86 odd percent, so say to closer to 1,000 rupees per ton, and EBITDA has actually jumped or doubled quarter on quarter basis. And again, this company has touched a capacity of 100 million tons and looking to take this capacity to about 140 odd million tons. And on top of it, cost efficiency is also a factor which is going to sort of play out. So both Ambuja and Ultratech, you will see better volume growth, again, better than the industry because of the M&A. And on top of it, we are going to see cost efficiency, so which is why both the companies are expected to report better EBITDA per ton. So I think worst is behind and things are looking a lot more better for entire cement as a pack. So I think cement, there's definitely a pleasant surprise.
Absolutely. Next up, let's talk about BFSI, starting with Bajaj Finance, maybe.
So again, BFSI, after the tier one numbers, what our numbers have come out, those are sort of mixed set of numbers. Bajaj Finance, again, mixed performance. So AUM growth was 26%. NI growth, again, a decent number. But then again, you are seeing a 25 bips margin compression because of largely because of the AUM exchange. And profit growth was 19 odd percent. And the credit cost has peaked, and companies saying that it is going to sort of stabilize in FY26. Again, I think Bajaj Finance has been guiding for slightly higher growth, but now growth is expected to be shade lower at about 25%. But still, ROAs are expected to be maintained at 4% plus, and which is why we would want to believe that it is a sort of a minor slip in terms of the overall growth trajectory, and which is why we continue to maintain a positive stance. But when I look at the Federal Bank numbers, slightly disappointing, I would say, not mixed. Because see, this company has been guiding for 1.2 to 1.5 percent or 1.5 time kind of a growth. But overall, the growth in this particular quarter was in line with the industry. So that was slightly disappointing. And the other factor is that the company is saying that probably this year you are going to see deterioration in the ROAs to 7 odd bips, which is again contrary to the overall market expectation. Otherwise, numbers were okay. So, which is why we feel that this is one stock where we were bullish, but now we'll have to curtail our bullish expectation. And probably, I think this may not do well till the time growth picks up. So, which is why we've put a hold rating. But another stock which we've liked is CSB Bank. I think growth rate was good at 29.5%, although NIMs were down, but again, because of the idle liquidity which they were carrying. And I think asset quality is absolutely fine. This is one bank where we feel that the growth is expected to be pretty healthy at 23 to 25%, so much higher than the overall system level growth. The good part is that a good chunk of this growth is driven by gold loans. So from that perspective, things are looking quite steady for this bank, and ROA profile is expected to be about 1.5%. And whereas even if you value at about 1.2, the target price comes to about 400. So again, CSB Bank looks good, but Federal Bank slightly disappointing.
Absolutely. I think Trent also announced its results and some expansion plans as well.
So the challenge with Trent is that this is one company which is trading at the highest valuation multiple, so about 65 times FY27. Now, with that kind of a valuation, the challenge is that if there is any kind of a slip up in growth, the market sort of punishes. So numbers overall came out better than the street. So for example, margin overall sense was that 14 and a half was expected in terms of EBITDA margin. It came out at about 16 odd percent. EBITDA growth was good, about 40%, PAT again 21%. So numbers were okay. But then again, I think what we have noted is that the like for like sales growth is sort of coming down over the past few quarters. And this is more to do with the fact that as stores mature, the same store sales growth sort of comes down. While company is saying that they are going to open, say, 230 to 250 odd stores, that will again drive revenues of over 32% odd. But then again, I think the for like sales growth is expected to sort of come down, and which is where market has not really been liking, though it's a very natural phenomenon to happen. And what it does is that it puts pressure while it overall improves your margin profile as the store matures. But then again, the sales growth sort of tapers off a bit, and which is where the market is worried of. So our sense is that margin will further improve to about 17 odd percent. But somewhere down the line, we'll have to live with a slightly lower growth of about 32 odd percent. The growth rate used to be higher. But still, I think this is one of the few companies on the value fashion segment, one of the best place. But yes, definitely coming at a higher price.
Absolutely. How about Oberoi Realty, sir?
Oh yes, so I think this is another premium player. Delivers a margin of EBITDA margin of 60 odd percent, which is one of the highest for a real estate player. Now, before I come to that, the property registrations in Mumbai have been pretty good, up about 12 odd percent for the month of April, which is the highest registrations we have seen in the last 13 years. And again, within that, properties worth 2 crore and above continue to sort of do well. Their share is about 25 odd percent. So Mumbai real estate continues to sort of do quite good. Within that, overall numbers were slightly disappointing. So whether you look at pre-sales down about 50 odd percent, or you look at revenue bookings again down. But then again, see, for real estate companies, bookings and actually translation into revenues are two different things. For overall, if you sort of notice in this particular quarter, bulk of the pre-sales have come from 360 West. Now, again, this is one project which has already been sort of completed, and which is why this company can hold a lot of finished inventory and sells at prices as and when the prices sort of improve. And which is why this company commands one of the highest multiples, and which is why we are not so worried with the quarter dip in the pre-sales or the overall numbers, because their ability to hold on to the finished inventory is substantially high, and which is why, and because of the good balance sheet what they carry. And I think even we've seen that in a segment like, say, Goregaon, they have launched a tower D. There are already inventories they have of the finished project. So from that perspective, this company will continue to do well. One should not get taken away by the lower set of numbers. We have a target price of 2,100 on the stock. One of the best real estate players to sort of latch up on.
Absolutely. And finally, can we also get a bit about Jindal Steel and Power?
So, Vishu, contrary to expectation, numbers were slightly muted because, see, we were expecting EBITDA per ton to improve, but EBITDA per ton largely has been sort of has improved only by about 800 rupees per ton, and that is because of one-time non-recurring expenses. Sorry, 250 odd rupees. But our sense is that things are going to get better from quarter 1 onwards. One, there has been a price hike of about 6,000 rupees, which will get reflected. Then there has been the fact that coking coal prices have declined. And then I think the company has been expanding. So benefit of all that will sort of kick in. And which is why I feel that despite a slightly lower set of numbers, it's a buy at current levels with a target price of 1,100.
Absolutely. Well, that was it for this week. Thank you so much, Pankaj sir, for your insights, and thank you everyone for watching.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.